Some people that's exactly what they're doing, is repositioning. They're going from residential income properties to triple net leased retail commercial properties. And so that's what's given them the new basis, better cash flow, and just no landlord responsibilities at all.
What it is, what it does.
What it is, and what
What
it
it
is.
is.
What it is, and what it be.
Welcome everybody to today's episode. We have a very special guest, Mark Jacques. Mark, thank you for joining us today. Mark is a very savvy agent, handles commercial and residential properties with lots of experiences. Before I have Mark dive into a little bit about his background, today's video is going to be about triple net leases. Essentially what they are, what they do, how this works for tenants, landlords, and so on. So Mark, before we dive into the video, would you mind sharing a little bit about who you are and what you do?
Sure. Basically, I've been in the real estate business for the last 40 plus years. Started out in the single family selling vets, and then slowly worked into investment real estate, did a little bit of land, and then went into selling commercial, industrial space, retail space, etc. And then just kind of moved on from there. And then we started the first investment division of another company in Costa Mesa back in the late 80s. We've sold everything from a small industrial up to a couple pretty large apartment buildings, 420 units, 320 units. 280 units over the last 15, 16 years in the Southern California area. We do service pretty much all western states and across the country because the commercial properties, most investors go anywhere with it because they want to increase their return.
So, as promised, we're talking about a triple net lease. Mark, can you go ahead and explain exactly what a triple net lease is?
Basically, a triple net lease is a property, commercial, either industrial, office, but mainly retail, where the investor is buying a property that is leased by one tenant or multiple tenants, and the tenants are paying their prorated share of all the expenses, taxes, insurance, maintenance, common areas, everything. And basically a real absolute triple net lease is basically no landlord responsibilities. So that is what a lot of people are leaning towards these days because of the residential tenant experiences they've had over the last 3 years, especially during COVID. They have been looking at taking and increasing their value, increasing their cash flow, and getting a new tax shelter by going into triple nets. But the main thing about the triple nets is basically it is hands off. You can basically have a coupon clipper, as they call it, to where you invest your money in and everything's taken care of. You have one check in, one check out, or if you do financing, you will have your net income after the financing is paid. But all the expenses are paid. Their prorated share. If it's a single tenant, the single tenant takes care of everything. If it's multiple tenants, they take their prorated share, their percentage of the project, and they pay their share of it. And the landlord has no responsibilities at all.
And so one of the questions was, why is this a great opportunity? And I think that basically covers why this is a great opportunity, but can we dive a little bit more in depth onto essentially why landlords may want to look at something like a triple net lease over maybe residential purchase for an investment property or duplex or something like that?
Well, what we've been seeing a lot, pre-pandemic, we had quite a few groups that were going to take their pent-up equity that they had been earning over the years, long-term ownership in residential income or even single-family homes. They've been taking and trying to figure out how they can increase their cash flow, and also one of the main parts out there is how they keep their cash flow as a new tax shelter. So right now what they're doing is they're taking it and moving it from residential, and in the residential sections and sectors, basically your tax write-offs are lessened by, you know, the building versus land. In the commercial, there's more onus on the structure itself, and so you have a better tax shelter, and so when you do trade into a triple net lease, you're going to be able to shelter your income better versus a residential property, and at the same time you're going to be able to increase your income, because a lot of people had pent up equity from before pandemic, but especially during pandemic. Lots of prices went up for no other reason except low inventory and low interest rates. So now they have a lot more equity to move, and they'll definitely increase their cash flow from there.
And I know that you had a property in Dover Shores that you guys wrapped up and closed. Did a few multi-family units as well that you guys are selling. So for a certain client, you guys are selling off those properties and rolling it into a triple net lease, if I'm not mistaken, correct?
Yes, and then this was something that's been in the making for a while, because people during the pandemic really didn't know where they were going to take their properties at that time, because nobody knew what essential was. So now that the smoke is cleared on the COVID pandemic for the time being, they basically are, I have probably 3 or 4 groups right now that are taking their smaller residential properties and some of their single families, and they are trading in there because they have a pent-up equity there, and they can, we have some people that are actually doubling their income off their properties by going into the triple net, and again, they'll be in with a new tax shelter.
And doubling your income is always a great thing, especially when you're an investor. So if you guys are curious, interested, Mark and I would be more than happy to be able to assist you guys in basically getting started. But we heard about the pros. What about cons? Are there any cons with doing a triple net lease?
Well, you know, there's cons. I mean, there's risk with every investment, real estate, residential, or commercial. You know, you have businesses versus people that are occupying your residential property. So you will. There's always some risk, but most of the people that you're dealing with on the triple nets, this is their livelihood. This is what they do for a business, and they are. I'll tell you, they work very hard to not only pay their bills, but to keep their companies going. So you need to do your homework. You need to go into a property that something you're comfortable with. Maybe you like a car-related deals. Maybe you like restaurants. Maybe you like clothing. There's all sorts of things that you can go into that you feel comfortable with, but you need to really do your homework on it. Make sure it's something you're comfortable with, and make sure you do the numbers. Make sure that this is what we're trading from. This is how much we're getting, and make sure you're working that at an after-tax situation. And then if we go into the triple net with our equities from here to there, this is what we're going to get, and have your CPA do the numbers on how much you'll be keeping versus the previous deal.
Absolutely. With the triple net lease, what are some of the clients that you could expect to be able to get? Would it be big fish like Ross and Target and those types of clients? Would it be like Chipotle's? Would it be smaller mom and pop? Or would it be basically all the above?
Yeah, it would be all the above. Like I said, a lot of the people out there that have owned properties for long term, they have basically a depreciated base where they have no more tax advantages. Okay. So a lot of the people be looking at this as a potential. Obviously, if they're paying the full tax on it right now, this is an opportunity where they can go and trade into this and not only increase their cash flow but keep a better portion of it. Yeah. So that's an option, and you can do it with smaller properties. Right now, the financing, just like it is in residential, is a little bit intrusive to purchase. So, the cap rates have to move up a little bit higher, and the rates have to come a little bit lower if you're going to finance. Most of the people we're dealing with right now, they're taking free and clear properties, and they're not taking on any new debt, and they're gonna roll it in all cash because they don't want to deal with the atmosphere where the loans are right now. So, but that's not going to last forever. So we'll have opportunities. And
price points?
And basically you're probably minimum out there, and that's you're opening yourself up to going out into the western states and maybe a little bit more inland. You can start out at somewhere around $1 million to $1.5 million up to it's you can the
Sky's the limit. Almost.
Sky's the limit. Yeah.
Awesome. Well, if anyone is out there, of course, we can't give any tax or legal advice, but if you guys are interested, we would be more than happy to help get a search together, help get you prepped and get you started and answer any questions. But for someone that's out there and they're watching this video and they just want to start getting an idea, what should they look for as far as opportunities out there in triple net lease? Is it something where is it like a Zillow out there for triple net leases where they could go and browse, or how does that work if they don't have a professional like us to give them a
Well, yeah, there's all sorts of sites you can go on. There's a couple really good sites out there that you can go on, which is LoopNet and other ones where you can just take a look at the broad picture and really look at everything that's out there and see the type of things, and you can put in a search from 1 million to whatever your parameters are and just get an idea what's out there. Then you can kind of see, but you got to really do your homework on them, because a lot of people out there put in, maybe it's a double net or a single net, and if you really want a hands-off approach, you want to do a triple net to where you can take it and you don't have to deal with any of the landlord responsibilities except owning the property and taking advantage of the new tax shelters, cash flow, etc. So, but in my opinion, and for most of the people I've talked with or I work with, they like the full triple net, the absolute. No landlord responsibilities.
Which, if I'm not mistaken, triple net is just one type of commercial investment, right? There's single and double as well.
Well, yeah, no, they're basically you're just paying certain. If it's a double net, you have maybe the taxes aren't being paid, or if it's a single net, you might not be having the maintenance and some of the other items paid. So for people that are really wanting to get away from management and paying for managers to manage their properties, this is a perfect opportunity for them. Yeah.
Awesome. Well, Mark, as always, thank you so much for sharing valuable information and insight about triple net leases. So if you have any questions, you want to get started, you want to diversify or essentially reposition some of your investments, we could also look at things like 1031 exchanges, other strategies. Never hesitate to reach out. Mark and I are here to help. We'll see you next time.